Good morning. We're already September 20th, ready to harvest a pretty good corn and soybean crop. We're right at the apex of that. For the week, December corn down 6 cents, November soybeans down 21, December Chicago wheat down a penny, Minneapolis down 4. So small losses in the grains this week. Opposite direction for the fat cattle, December up 380 and the November feeders up $7.67. However, not all-time historic highs in the cattle. A recovery though from the previous weakness. November crude oil down 2 cents. December gold up $19 and back to new 6,000 year historic highs in the gold market. So weekly crop progress continues to show slight declines in crop conditions, 1% in both corn and soybeans. Corn at 67% rated good excellent versus 65 last year, still above last year. Our yield model indicating 190, 1.5 in corn, down zero point 0.2 bushels. That is still 5 bushels above USDA and 7 or 8 bushel, maybe 8 above trend. Soybean 63% rated good to excellent, down 1% versus 64 last year. Soybeans 1% below last year's crop rating. Our yield model indicating 52.61 bushels for soybeans, down a more aggressive 0.24 bushels. The soybean yield potential is slipping more than corn percentage wise, and that is almost a bushel now below USDA. 1 bushel off of our USDA numbers is almost 80 million off of our 300 million carryout. That would be quite bullish soybeans. And the fact that we're continuing to decline here probably means that soybeans are going to lead the market higher. Of course, the lie detectors, I call combines lie detectors. Lie detectors will be going into corn and soybean fields, much more frequently in the next few weeks, especially those soybeans. So we'll certainly see if those yield estimates are going to continue to be disappointing, as we have heard so far for the early harvest. Of course, the early harvest is in those crops that were under stress, and so maybe these 10 or 20 bushel below last year yield estimates in corn are only for a small percentage of the crop. But this is very important as we get these disappointing yield estimates on the early harvested crops. We're surprised that the corn yield model is not dropping much, but the soybeans are dropping more aggressively. Maybe that's indicating that the soybeans are a little more disappointing than the corn. Certainly less than USDA, whereas the corn is 5 bushel above. I think that might be indicating soybeans will lead us out of this bear market first. But you look at these charts in a minute, it doesn't show that. Spring wheat 94% harvested, 2% ahead of normal, so that is a non-issue right now. Corn, though, the recent rally, we've gained 40 cents from these lows. We gained half the losses back from February, which was the high of the year. And so, corn has already recovered quite a bit. Is that justified based on the potential yield? Not based on our yield model. So just stalling out in corn this week, a little bit losses, not significant. The corn chart actually looks more like we've broken the downtrend than soybeans, and yet soybeans indicate a lower potential crop than USDA. But look at these bottoms here. We're indicating that soybeans are finding a floor, and maybe we can bounce down here to this $10 level. I would be a buyer of soybeans. I'm a little reluctant to be a buyer of corn unless we can come down here to this 390 level. Unless we hear more disappointing yields, I think that the corn market probably can have more weakness based on that yield potential we're still finding in that yield model. I mean, if the yields were that disappointing all over the country, why isn't that yield model coming down more aggressively? Maybe it will in the next few weeks, but actually, I still think the soybeans buying at $10. You can't wait and tell us to go down to the old lows in soybeans. Whereas in corn, I wouldn't buy it until we get down into that 390 area. And for farmers making sales, that does indicate, if you made some sales for this year, you're probably going to want to buy it back if we can get down to that $10 soybean level, or certainly in the corn back down here to the 390. So Rainfall forecast for the coming week. Wow, look how wet it is here in this previously dry area. We've seen crop conditions decline more aggressively, especially in soybeans in Missouri, Southern Illinois, Indiana, Kentucky, Tennessee. Look at where that red is, some pretty heavy rain. Is it, we're late September. Is this really going to help the crop at this point? In fact, it might hurt harvest, but late planted double crop soybeans, we probably have ranges from 3 to 5 million acres each year. But, there is some double crop soybeans that will be late, and the question is this rain early enough to revive it, or is the crop already relatively decimated? The week 2 forecast is going back to normal, actually below normal up here in these Michigan, Wisconsin states. But, at least that's a little better harvest. Especially important is this warm forecast. The next 2 weeks are supposed to be warm. This is week 2 going all the way to October 3rd. So certainly the freeze damage, most of those crops that actually we start out planting early, and now we actually have crops a little behind normal in some cases or near normal, but we did need a late frost in some cases to make maturity, and it looks like those northern crops are going to get it. Wheat charts, it looks like maybe we've probably bottomed the wheat. We've got, a higher potential high here in the Chicago market, but boy, it's showed some weakness lately. And if you look at spring wheat, look at how spring wheat declined so significantly over the last few months. We got a Canadian report on stocks a week or two ago that said stocks were down 25% in spring wheat, durum, and many other crops in Canada versus last year. What happened there anyway? Well, tariffs on Canadian wheat and durum went on, and it appears that Canada shipped most 25% of their stocks into the United States before the tariffs went on. What a travesty there. Maybe that explains why spring wheat has had this precipitous drop lately, the last few months of the year. But very disappointing charts there on spring wheat. We didn't have a very good crop in spring wheat, but still problems. Here's that live cattle market running up to highs. We dropped about 6.5, almost 7% from high to low, but we need to drop more than 7% to indicate a top is in place. This is starting to look more like these other corrections that we had on the charts. So just another little correction in the cattle market, and we're going to run to new all-time highs again. Wow, wouldn't that be something? So on the feeder cattle, not much different. Maybe a little deeper correction here, but still right at the 7% mark. Maybe like some of these other corrections. And so is the bull market over yet? The price action the last few weeks does not indicate that. So I would almost rather bet on continued runs to new high in the cattle market. As high as it is, still I don't see a top formation here yet in the cattle market. Here's the crude oil market the past year, showing some stability here, maybe a little bit of weakness, but we haven't broken through this support shelf yet. And in the gold market, probably the best bull market left in the year, making new all-time 6,000-year highs here. And after breaking out of this range, it certainly looks like gold is going to run to that 4,200 mark, which would double our previous all-time high. I think that's the target. We still have $500 or so to go in the crude market. So what a beautiful bull market we have in the gold market. Is that an indicator that cattle are going to do the same thing and continue to run higher? There's trade issues going on here. They're probably going to affect the grain markets, but wow, what a nice indication. In grains, we've got a pretty good corn and soybean crop yet to be harvested. We're coming right up into the harvest. Maybe we'll see some weakness. That should be the last weakness of our 3-year downtrend. And I think that once we bottom the corn and soybean market, I think the soybean market will bottom first based on our yield expectations. But as the lie detectors, the combines, roll into the fields, we're going to find just what we have out there. Are some of these disappointing early yield reports widespread across the Corn Belt, or are we going to see some very big crops in some areas as well? I think that's the key to how low we go. Do we go down and make a double bottom in corn at 390. Can we run soybeans down to $10? Both of those are probably buy areas for speculators. And for grains, for farmers who have sold grain, I would look at those areas as well to buy back grains for a bull market run once we get harvested this pretty big, potentially record shattering crop in 2025. Hope you have a great weekend and good marketing.